Good morning, everyone. Marty Missouri, March 15, 2019. Going to spend just a few minutes with you this morning on the chart. Still catching up from a few days off, so this will be this week's message as well. Although probably should look for maybe an item or two from me in writing if I think something is worth reporting to you over the weekend. But in terms of the more sometimes robust weekly message that I often do in writing, we'll just call this chart presentation that as well for this week. So our familiar chart that we've been looking at for weeks, we have a good move this morning once again, testing this high back here. Like I said a couple days ago, we get through here, and I think there's probably not a lot of supply, not a lot of stocks for sale right in here, which means we could quickly move up to this 2874 level, possibly beyond. We're getting closer and closer to the September all-time highs. 50-day moving average looks very encouraging, as does the 200-day moving average, beginning to slope in the right direction. The very short-term 10-day moving average, which has been important this whole time, has been recovered here, and we're getting a nice move above that. So from a simple price action perspective, things look pretty encouraging right in here. In terms of the on-balance volume, which I like to review with you, last couple of days we had a nice move up on pretty good volume. Came down yesterday on relatively light volume, so this little look here is encouraging, where we have this move up, definitely buying coming in. However, you just go back a few days and this would be a bearish look in that we have a higher price, but we have lower on-balance volume. Last couple of days encouraging. This really here calls into question the odds of what I just described actually happening, at least with this one indicator. Further back though, it's pretty encouraging. This does show a bullish divergence on a longer term basis, the slope higher versus a flat slope here. So, nothing conclusive here from a volume standpoint. In fact, bearish if you look over the last couple of weeks, but then bullish when you look at it just in the context of the last few days. Now I want to take a look at just a couple of breadth indicators in closing this morning, because I think these are very important as we assess the longer term trend and the price action and so on. So breadth would be a measure of, the way I like to say it, to what degree are all boats rising with the tide? Is the market moving up with just a handful of stocks, or is it the vast majority of stocks in the index? In this case, this is very encouraging. Here we are off of the December 24th bottom. And as you can see, we've had a very strong move in the number of stocks trading above their 50-day moving average in the S&P. It's actually 81% currently. A little bit off here with this dip, but still a very high reading. Last time we saw this kind of a move in this particular breadth measure was all the way back at the very bottom of that 14% correction from peak to trough in 2016. Once it finally bottomed on February 11th, as you can see, we've got a huge thrust in breadth, very much like the one we got right here. So I think that should be viewed as something encouraging. You can see as we bottomed here, we didn't get anything like that. We didn't get anything like that here. So this shows some real conviction across the board among the member stocks in the S&P 500. One more breadth measure, and this, if I had to pick one, this would be my favorite. I've looked at the AD line over the years, and it has been one of the best long-term indicators for the market. Back here, as you can see, before the big drop in 2008, we had a bearish divergence. The advanced decline line was declining, more decliners than advancers on a daily basis, while the price action was actually rising. So that was, among others, that was a bearish signal. Here, while the price was dropping back in 2011 with that big correction that we had that was 19% like the one we just had, you can see that the advanced decline line was actually flat while the market was down. That would be somewhat of a bullish divergence for this indicator. What was real telling was in here. We had that long sideways move from 2014 to 2016 as we were consolidating those big gains of 2013. Months before the S&P broke out of that consolidation, the advanced decline line broke out and didn't look back. So that again was another strong sign that that breakout was sustainable. So here we are today. We have this big drop off of September. We have the market fighting its way back, and we have the AD line having just made it to new all-time highs. A little dip here with the recent drop, but overall a very positive bullish divergence for the AD line. So folks, from a breadth standpoint, which would be more of an intermediate to longer term look at the health of the market, this is very encouraging. Again, with some of the shorter term indicators like the on-balance volume, that's ambiguous right now. Nothing really ambiguous about the breadth indicators in terms of the likelihood that we will indeed move up and through the September highs of last year before we actually see, a bigger correction or the next bear market. Of course, there's a lot of fundamental things that we talk about here on the blog. This week I offered up an abbreviation of my current 6-month thesis, and as time goes on the written blog, I'll update that and show you whether or not my assumptions are actually coming true on a more fundamental, more macro basis. Folks, thank you as always for watching and listening. Hope you have a wonderful weekend, and I'll be back again very soon. Take care.